All right, guys, welcome back to the Capital Mindset Show. We're going to be doing something kind of interesting here, but you guys who are seeing the recording don't get to see this part, but I have people in the Discord who are actually participating in this live. At any point in time, they can talk voice, but I'm watching their chat as well to ask questions. This is a repeat of a call we had yesterday where we were talking about, I guess, the newest craze, which is the British pound versus the US dollar kind of tanking. So the chart that you guys see before you in the recording and in the Discord, so I'm trying to make sure I'm explaining it to both, but you guys are all one audience at this point. So what we saw here, was shared yesterday in the call, and I think it's a good visual to kind of gauge what the heck is going on right now. So as you can see here, the US dollar in relation to other currencies, major currencies of developed nations, has actually risen drastically. Now, if we can go back and recall some of the older topics and kind of connecting the dots to what's happening today, remember that the US dollar in principle is the world reserve currency. Now, this has a whole host of implications, that being that the US dollar is a tool. Okay, that's the primary thing that you got to think of. If you're an American, you just think of it, well, it is a tool of currency, of means of exchange, but it's more than that to the rest of the world. It's more profound. Okay, so it is also that, but it's more profoundly so a tool than kind of what we think of in the United States, and it's more important than anything else. Now, if we refer or go back to some of the other things we talked about, how don't count the US dollar out so easily, that the US dollar as kind of a world reserve currency is far more entrenched than what people really believe. I've been seeing always the typical commentary on YouTube, for good or for bad. I could name some names, but you guys can probably come up with some already if you're watching this video or watching this through the Discord. Who comes to mind when you say, okay, the dollar is going to collapse and stuff. There's plenty of content creators out there who say that, but every time you hear that, I want you to kind of question that narrative, because there's a reason why the US dollar is where it is today, and it's a self-fulfilling prophecy, yes, but that self-fulfilling prophecy is kind of like, okay, who's going to be the first guy to step off the ledge, right? What else are you going to use at the present moment in time? Now, the usage of the pound, of the euro, has actually increased, and it is significant in the world today, and it has been recovering a bit since the pandemic. But there's not really other valuable or valid options out there. Let's give an example. So you have two countries that are trading with one another. Let's use an extreme example. Mexico and I don't know, another country. Let's use Australia. Mexico and Australia are trading with one another. They might not necessarily agree on using their own currencies as a means of exchange. And we're talking about entities within Mexico, entities within Australia. But they can probably settle within the US dollar. Why? Because the US dollar is used elsewhere. So again, self-fulfilling prophecy in that sense. But that entrenches the system further. And there's also derivative assets, US dollar denominated assets created all over the world. And this kind of points to other theories that you guys have maybe listened into. And I'm talking about the Discord here because I know you guys definitely read up on that stuff. But you might have heard of dollar milkshake theory or dollar black hole theory. And the premise is pretty simple. I'll try to break it down. But basically, it kind of relates to all this. That being, the US dollar is used everywhere around the world. A ton of assets, dollar-denominated debt is created everywhere around the world. Debt essentially is future demand for said currency in which it's derived. So if you borrow in euros, you borrow in Brazilian reals, you borrow in the Mexican peso, you get the point. In the future, what that is that's demand for that currency, because you have to pay back your debt in that currency because it's denominated in that currency. And so if this expands, let's take the dollar, if this expands across the entire world, all that is it's collecting a future demand for US dollars. And if there were ever come a point where there is, let's say, I'm going to use the word because you guys are familiar with this word, a crunch of some kind, then that could have a cascading effect in which people kind of rush to the door for said asset or said tool, let's say, in this case, because it's the dollar, in order to get that, because a lot of their debt, a lot of their derivative assets are denominated in that currency. And so it shouldn't, again, be a surprise. And like I say, this is not and what I said yesterday kind of coincides with today, because again, today is kind of a redo of yesterday, a little bit more in depth, because I'm going to go into it, but some of the things I am heavily repeating. But the U.S. dollar as a tool, okay, if we all rush to it, you should be seeing sort of a spike in relation to other currencies and kind of a dump of these other currencies. So we saw a very similar phenomena happen in, I think it was the year 2020. That's back when I was working something else, and we were looking at this exact thing play out, but more in the emerging market sector. It wasn't so pervasive in the developed markets. But if you guys recall, there was a moment in time. I don't know if you guys were paying attention to currencies back then, but if you were, you probably remember, okay, the US dollar was spiking relative to, for example, the Brazilian real, sorry, and other developed nation currencies. It actually caused problems within Turkey. If you remember the news back then, it was actually in the news cycle. So yeah, and kind of expanding it today, it's the same premise as before. It's just basically a lack of liquidity in the system. Believe it or not, there's not that much liquidity out there as you might think, all the QE that you can think of. The way this probably all ends, and this has already been stated in previous live streams, I'm actually going back and through all the live streams, because I've actually was ranting about this with you guys in the Discord. I'm really done with the titles. So a lot of the live streams where I have a lot of this comments, and I found one, for example, on when I talked about Target, Walmart, and what's going to happen with the consumer. I found it, and guess what the title was? Capital Mindset Live. That's it. So like you're looking through that, and you're like, I have no idea what this is talking about. You go in the description, no mention of what's talked about. So basically, and it's a 3-hour live stream. So basically, you'd have to watch it to actually find out what's in it. And that's not practical even for myself, because really it's for me more than anything, because I like to go back and see, okay, what did I say then? And it's a nightmare to do so if all that the titles are just Capital Mindset Live, because then I'm the future. I'm going to forget what I said there, and then I have to go back and watch it. So it's best if I have, coherent titles going forward. But I guess I was just getting lazy and just typing Capital Mindset Live. Let's go live. And that's basically what ended up happening. All right. But let me see here, because I want to make sure I'm watching the chat here. Foreign currency, Russian ruble, British pound. Oh, okay. So that's talking about the Russian ruble. Yeah. Every time I see with a win, I expect some controversy a few weeks. Oh, okay. You're talking about, Biogen. Well, what's going on with Biogen? We can talk about some stocks in this video here, but it's not so much like a live stream. I want to focus it on this, but maybe when I close off this recording, we can talk about Biogen. China plans to issue 2.2 trillion yuan government bonds. So they wish they could borrow from the world in their currency. It's just no one really wants their currency. I think all that's just noise with China. And by the way, in that video or this live stream, let me actually pull it up. I retitled it. It's the one posted on July 23, 2022. And let me actually mute it, but it should be retitled. No, the retitling didn't save. All right, fail. What a fail. Okay, so I exited out before it changed. But anyways, in this exact one, I discuss more about China actually lying about its numbers way back in the time. Yeah, F in the chat. Yep, thank you. So much on my plate, I guess. Mentally distracted. Okay, so then there were these other ones that are basically a bit of a concern. Okay, wait, hold on. Let me see what you guys saying. Cap and crunch. Yeah, so you got, yep, I love the meme. So the liquidity crunch. Basically, all that we were discussing today, it's all connected to that. It's a lack of liquidity. That's the TLDR. If you want to basically say it in one sentence, lack of liquidity. That's all that's going on. I think explaining the possible global ramifications of the UK pension fund collapsing would be good. Well, if the UK pension funds did collapse, right? If they did collapse, the actual scenario, let's say there's probably a plethora of scenarios that might actually happen. So me saying one would probably be incorrect. But my presumption as to what comes after said collapse, right? Let's say it were to collapse. that would bring into question, for example, all of Europe. The ramifications, for example, the European pensions collapsing would be an absolute destruction of their economy. But that's, I think, the obvious statement, obviously. But let's think about it as to how pivotal the pension fund system in the Eurozone is. Well, the vast, not majority, we got to be careful saying that, but a huge chunk of the actual output, the internal output of these countries for the consumption is reliant on the pension fund system continuing and thriving. So if the UK pension fund system were to collapse, that would be internally a nightmare for the UK. But expanding upon that, let's look at the broader continent of Europe. The ramifications that would have across the entire continent would definitely put the whole world into a very interesting predicament. A recession would be a light way of calling that, but and exactly so. They would have collapsed yesterday had the Bank of England not intervened. Yes. Now, the reason why they were actually getting in a bit of trouble is because a lot of the pension, oh yeah, this was also what we talked about yesterday, but a lot of the pension funds, not a lot of them, all of them, they use derivative assets to kind of maintain the stability of said funds. Because if you think about the goal of a pension fund, it's to make sure that you are safe and liquid for those who are reliant upon you upon their retirement. So that's your primary goal. It's not total return. It's maintaining stability above all else, preserving capital. And so a lot of the derivative assets that they use to do so don't really account for a sudden collapse in the currency. And collapse is a strong word. It's not the same what's going on or what happened in Venezuela or Turkey or Lebanon. It's not the same thing, but relative to what is expected of a developed nation, it was a surprise. And a lot of the derivative assets used by the pension funds system or pension funds individually were not prepared for that, to say the least. So there was a point, if you guys saw articles, you probably saw margin call. This was kind of being spread everywhere. But that's basically why. And so they had to front load a bit more capital in order to kind of save the pensions from doing that. And of course, the UK government definitely would not let that happen because, again, the ramification. They're going to take the bullet. Because, again, if they were to just allow it to happen, it's questionable. All right, so someone is sharing an image here. Let me actually pull this up. So, been out with a friend who is a board member of the UK pension fund, advisor to many others, the allowable risk. So everyone took it as a way to leverage to make unfunded liabilities look funded, pushed by structure created backed by the big consultants. Everyone thought they'd let me open this for you guys in the recording. Oh, it's kind of blurry, but it is what it is. And here you go. All right, so I'm on the second part. Everyone thought they'd be fine because of the classic reason it happened before as allowed and everyone was doing them. Logical risk was shoved under the carpet because quant risk was low. It was a classic hurting into leverage. So they were over leveraging themselves, believing something could never happen, and classic, it did happen. All right, heads should roll on this one. 12 years of regulations, draconian clamping down on risk in all sectors of banking. That's probably what's That's probably definitely what's going to happen in the UK. That's always a joke, but the UK too. But yeah, I think that largely by the way, we can talk about the Nord Stream sabotage or explosion. That's another thing that's being talked about. But yeah, my gas price is back to $6 again. Where the heck are you from? Oh, you're in California. Okay, that makes sense. Yeah, because gas is like, well, I don't go to the gas station myself, but my wife tells me it's like $3.25, $3.50, something like that. So, yeah, you gotta move out of there, man. By the way, do you know the ex-head of FCA regulator is the current chancellor of the? Yeah, no, I did not know that. That's crazy. Oh, that's a good meme there. I'm just reading the comments from the Discord, everyone who's watching the recording. This may be a pain to do, but adding timestamps to YouTube live stream. Yeah, to me, Jay Brown, it's way too much of a pain to do timestamps for the live stream. That's why I'm doing about an hour for live streams now, because that's more sustainable for me, more sustainable for you, the viewer, to watch the live stream if needed. And I could do probably timestamps for an hour-long live stream, but not a 3 hour long. I don't have the time. Get Fuhad on it. Yeah, Fuhad makes some funny ones. He does it occasionally for the Sunday calls, but that's it. Heads won't roll, nothing will happen. They did nothing wrong. All right. Calling a liquid gas. Yeah, I know, McBuddha. I know. But it is what it is. It is what it is. We have our ways of saying things. So let it happen. Okay. So I'll let it open to any form of questions, but that's basically the TLDR, so to speak, on what we talked yesterday. We were going to go over this a little bit, or this, but I think it's all still explained. The simple answer is it's a liquidity issue, and basically the world itself is on the dollar system, and there's just not enough dollars to go around. Gas is cheap at Taco Bell, apparently. I love that joke. Yeah, so I'll open it up to last minute questions, and then if not, we'll close the recording, and I will see you guys on the recording on the next one. I have some stocks that are actually on the request. I have a ton on the regular request, and then I have a good amount on the other request. Let me see. I'll tell you guys which ones I'm working on right now. I am working on an update on MPW. Oh, that's also what was discussed yesterday in the call. See, I don't typically record the calls, but yesterday's call I think was enough for that everyone was interested in the topics that I'm doing this recording now. Sony. Oh yeah, Lincoln, you've been asking for Sony for a while. Okay, I'll get on Sony because you've been asking and you just asked now. All right, so but Sony's going to be a difficult one because they have a lot of business lines that you kind of have to analyze individually and then combine it together into one analysis. And some are more material than other. Okay, +1 for Sony. So Sony, oh my gosh, it's Sony. I'm also working on, I think, Blackstone because that's been requested. And let's see here. Where'd I shove them? Here you go. Yeah, I'm working on Blackstone and DKS. DKS is another one. I think Zed requested DKS. I'm also trying to work on Tyson Foods. Tyson Foods has been requested a lot. And an update on MPW. Okay. But I can give you guys the TLDR and MPW. But basically, if you guys recall, I have the video, or you guys can go to the portfolio and find the video, or it's a live stream actually, where I went over discussing why I sold what I sold, and one of the stocks that we sold for a small profit was MPW, and I got some questions as to why. It's not titled that, so again, like if someone's looking for it, the only way they kind of find that logical progression is through the portfolio, but at least that's organized that way. But you go back to the video on the channel on MPW, all that still stands. It's just updated information regarding the management team. So that was a bit of the risk that I saw, and that's why I left. And then turns out that was actually the tip of the iceberg. So there's actually way worse things going on under the hood, potentially. So it's kind of a wait and see. And if you're buying MPW now, as a REIT, all the other stuff still stands regarding the properties being a double-edged sword. So there's a benefit and a drawback to them. What comes to mind immediately for MPW is the question marks around the management team, what it is they were doing, extending credit to a tenant supposedly, and at the best, it kind of seems negligent. And at worst, it could appear as though it's fraudulent. And so the concern is either, actually. And so the discount is, I think, warranted right now. Because if you look at MPW, and you know what? Let's pull up MPW. I said I wasn't going to do a video on this. Oh, and by the way, an update from the live stream. I ended up buying a steel case. So I'm excited for that. I bought a steel case Leap version 2. So I know some of you were giving me recommendations on shares. That's the one I ended up with. And I'm going to move this desk into the bedroom and then change out this desk into something else. Not this main desk that you see me on, but well, You guys on the Discord can't see me because my camera's off, but in the recording. All right, so I'm going to pull forward MPW to kind of show everyone. You guys can't see it on the Discord yet because I'm pulling it up. So no worries. All right, so if we look at it right now, it's at $11.66. The book value of this is about $14, around there. So you're getting it at a decent discount to book right now. And the dividend yield is 9.95%. So I'll repeat this. Every single time that it's been this way has been a buying opportunity in the past. But we have to be very careful with this because the past can't be our measure of the future. It can't be our only measure of the future. So just because every time in the past it's worked out when you bought it at this yield doesn't mean that in the future it's going to be the case. But some people stop right there and they just kind of, presume that and they get involved in the company. So again, I'm kind of giving you the TLDR as to what you have to be worried about with this company. It's quite literally the management team, as well as the broader liquidity crunch that has finally affected the high quality REITs. Okay, so if you're asking me, the high quality REITs that I'm watching, and it hasn't changed again, because when I make a videos I made in February about these REITs, or I think January, February, somewhere around there, beginning of 2022, are still valid today. I still would like to own, again, Realty Income, which right now I can finally buy it back at a lower price than when I sold it, which is awesome because it's happening. WP Carey is another one that's a decent quality. Agree Realty, those are the high quality ones that are on my watch list. And then there's these ancillary plays that might present as opportunities like MPW in these more specialty real estate types. But you're looking at this, you're getting a 10% yield. And for some people, that's very enticing. That's very mouth-watering yield. I'm basically, saying, but mentally, I guess newer investors, they look at that, be very careful because that's the market kind of telling you there is a risk here. So aside from the broader liquidity crunch that is affecting a lot of the REITs, which if you're curious on that, I don't know if I should get into that here, but there is content on the liquidity crunch versus REITs. I think there's even a dedicated video to just REITs that was published earlier this year that's still relevant to today. So let me just kind of go over MPW here though. All right, so let's go to their website here. Let's go to their investor relations. But if you go through this, you can kind of see what it is that they own. They own a lot of medical properties. You can see general acute care hospitals, behavioral health facilities, inpatient rehabilitation hospitals, et cetera, et cetera, et cetera. And there's a lot of other players. There's Physicians Realty Trust. There's also another larger player called Ventas. I think it's VTR. So this one owns also medical offices, research facilities, et cetera, across the United States, and I think also internationally. But you're going to get a lower yield, but more arguably a better management team with this one. And they're growing at an internal rate of about, last time I checked, like 6-ish%, which is pretty good, especially for their size, because that's the key here, the size. So like Realty Income, I know I'm getting ahead of myself, but I like REITs, if you can't tell. They're not my favorite kind of company. You guys know what's my favorite. But with REITs, oh, look, you see, we're getting Realty Income under 60. Not that it's like I'm buying it right now, but, just to point it out, it is happening, which is nice. And so you're finally getting Realty Income at above a 5% yield. Now, with Realty Income, why I brought them up all of a sudden compared to like VTR is their growth rate's going to be a little bit tamed now going forward because at a size of about $40 billion, which is like 36 billion market cap, the deals that they're going to have to take on have to be larger and larger and larger to be meaningful, which is really difficult. So this is why I'll say it right now. And a good friend of mine, this is his favorite REIT as well. And look, wow, it's down 4% today. Oh, this is a blessing. So it's happening. And so I'm not saying like, okay, if you're interested in REITs, start jotting them down. Start writing down the ones, create a watch list. Start creating your watch list and start, picking them up. Or not picking them up, but, picking apart which ones you want to own and then try to figure out what prices you want to start buying them at. Because look, like I said with the chemical industry, and in this case, REITs, finally, it kind of took some time. We're going to see some interesting buying opportunities. I guess you could say from our discussions we've had elsewhere on the Discord, semis as well. We're going to see that too. But yeah, for me, it's a long time coming. So I've been like sitting on like, dang, I've been wrong about these REITs, the liquidity crunch happening all around us, all these other entities being affected, and these high quality REITs. Only the high quality ones were like, yeah, we don't care. We're roaring higher actually. And I was like, what the hell is going on? So yeah, it's kind of, I'm happy to see it happening today, or not today, like the past month or so. Yeah, because you can see here. Because the video, I think I published it in January this year. Let me show you guys. So like January, and then there was like this early victory lap, and I remember getting a comment saying, "Oh yeah, your REIT video." It was one of my viewers from Asia actually, and so he commented, and I was like, "Yeah, cool," but then I was like super wrong for a while because you can see, well, wrong. Like let's say if I published it around here in January, let's say I did it here, but basically it was 17% up. Now, are we down? It was towards the end of January. Yeah, we're still not down. Agree Realty hasn't really moved that much, but really has now. All right, anyways. Except we're going to swerve the iceberg, buying equities now. Okay, so my only criticism of this comment, so I'm not going to say who, because this is only for Discord to know who commented who. You guys are, so just so you know how it works, the YouTube recording doesn't get to see who comments what. So I'm only just reading the comment. I'm not saying the names. So that should make you a little bit, assured. I'm not publicizing you guys. Okay, so I got a comment saying buying equities now is like buying a ticket on the Titanic. So it all depends on your perspective or on where you're at, I believe. Because if you're towards the end of your investing journey, yes, but you should have already been kind of diversifying into short duration fixed income securities of high quality. But if you're looking to buy assets now for liquidation in 2 to 3 years, there's a lot of question marks. Absolutely. But if you're kind of investing for 20 to 30, I know it's such a repeated mantra. It's so annoying because there's a lot of creators out there who are pretty cringeworthy. Let's all admit, pretty cringeworthy in their execution. But they all say this, but it's because it is still technically true, okay? But depending on your time horizon is going to affect how you feel about that. And I'd say that personally, I'm not really too much paying attention to that. I'm just acquiring assets I like at prices I like, because I have a very long time horizon right now, so I'm pretty good. But yeah, if you were telling me, the pressure would be on if you were telling me, hey, you have to buy something and you also have to sell it within 1 year. Yeah, I'd be like, okay, I have no idea what I'm going to be buying. It's a huge question mark. Okay, so let's see here. Oh, anyone coming in, let me just repeat again. This is a recorded session. So all of you, if you guys use your voice, it is being recorded, but you guys can just comment in the chat. That's what blah, blah, blah. That's what mostly everyone's doing. Okay, so anyways, going back to Medical Properties Trust, or MPW, the issue, again, is what they've been doing as far as extending their credit to some consumers, or not consumers, sorry, some clients, you could say, or tenants. And they also, what kind of got me off the edge was something they were doing as far as trying to skirt around the documentation of one of their credit facilities. They were trying to skirt around not disclosing something, and it had to do with, again, one of their large tenants, and I didn't like that. And that was, again, just like the tip of the iceberg. But so it goes to show you where sometimes those judgments can really save you, because the same thing happened, remember, with Intel. If we go back to the Intel videos from 2021, the late Intel videos, the reason why I ended up selling Intel was because of disagreement with management's allocation of capital. Because typically, as a philosophy, I feel like that's really important to kind of judge and agree and align yourself with management, whether they're doing it to your standards or not to your standards. And if it's not to your standards and you disagree with it, well, obviously I can't change their mind. I can't change how they do things. I definitely don't own enough. I wouldn't have owned enough Intel to do so. It was a way to say, okay, well, maybe you shouldn't even be involved with this. And so we parted ways, and it was a very good decision to part ways at the time we did. And, you know, there's other times that I sell out of a company that's not because I dislike it, it's because I see other opportunities, which, for example, the one that comes to mind was the video we did on Bristol Myers Squibb, which it was kind of like a part ways video back in 2021 with the asterisk that I was like, I like this company still. They're not doing anything inherently wrong. It's just I want to sell the shares here to buy something else over there. And that one turned out well because that was Cardinal Health. So, yeah, let's see here. All right, still go up. So Tauntaun MP, Spotify, it turned out there were way too many question marks for me on Spotify. I remember I did talk about how Spotify was something of interest. It's still something I'm kind of gauging here and there. And the process of kind of gauging a company like Spotify can take a really long time. I have to build up the confidence as to, okay, how is this business going to evolve over time? And is there a pathway to sustainable profitability that I can see? If I can see it, then I can get behind it. If I can't see it, there's no reason for me to get behind it, because then I won't understand what's really going on with the company at any given moment in time. So it's not responsible for me to own that for myself. I'd be doing myself a disservice. Like, it could be that, you know, it's a great investment, you buy it, and I make lots of let's make a joke here, lots of tendies. But it could also be that, you know, the company never is able to achieve scale, or the scale that, you know, we are thinking of in terms of having a sustainable pathway to profitability. And then therefore, you know, growing and dominating its industry. But it's, if I ever get to that point, obviously I'll make a video on it, because that's what, you know, this YouTube channel is for me to kind of vent out my thoughts. How much more pain do you think we had the chemical? Well, dead money for the chemical companies. Again, going back to the videos on the chemical companies, on CE, on Dow. So someone's asking, how much more pain do you think the chemical companies go through? What are you watching for? Okay. So that second part is, okay, the key. But yeah, for the first part, going back on those videos, or that video, I think there's maybe like 2 or 3, because the other 2 are like live streams, but there's one video. A decent amount of pain to go through, because if we're seeing a global recession, remember we had high energy prices. That means high input costs. And that's still a question mark in some parts of the world, how high the input costs will get. We've been seeing declining energy prices in the United States, but that's the United States. Elsewhere, we're seeing a different story. And so that brings a question mark right there. Okay, input costs, question mark. And then we have aggregate demand across the globe. Remember that in the macro videos on the channel, what was the reason why I sold my oil plays? What was the reason why I sold my commodity plays, right? We remember the successful one was BHP, so I'll point to that one, because Rio Tinto was not successful. Rio Tinto we sold at like break even, but BHP we sold at a really good profit. Why did we sell BHP? Well, we sold BHP because the thesis, all right, going forward in the near term, 1 year to 2 years out, was a potential decline in aggregate demand. So the reason for why we sold out was not a good one. Okay, so good in the sense that consumers were getting hammered by rising commodity prices, and so to the consumer, it's great that commodity prices could come down, but as you recall from the language in those videos, I said it very clearly over and over and over again, saying the reason for commodity prices coming down won't be a good one. And so we're seeing that play out today. And so what's ConocoPhillips at right now? But look, at the end of the day, I still made a huge mistake by selling my Occidental Petroleum. So ConocoPhillips is not too much farther lower than when I sold it at, all right? But it's at 102.03 right now. It's been pretty volatile like the past month or so. I've been seeing some days it's down 8%, some days it's up 4 or 3%, but there was a down day recently. I think it was this day right here. It's probably, it was this one. But anyways, and then BHP, what is BHP at? BHP I know is in the gutter right now in comparison to where it's $50, all right? So it's severely hampered down. Okay, so more people are joining in the chat. Once you go, oh my gosh, okay. That's a good way of phrasing that. That's a good way of saying that, not gonna lie. All right, so, and then what am I watching for as a potential bottoming in these stocks? Well, so I'm not hesitating right now. I'm basically just going into it. All right, that's basically my strategy, because in reality, I'm not going to be successful in determining the stopping point. So how am I going to position myself to be the most successful possible, with also the realization that, one, I am working pretty much full time doing something else, right? I cannot be watching 100% of the time this company and making sure, okay, this, it's finally, like, I'm not going to be able to do that reasonably. And then there's also the question of being successful at doing it. So what I just do for myself also helps out with, for, mental sanity, etc. And, have you guys noticed that there are days I don't even look at the markets? Have you guys been seeing that? There's some days I will go on the Discord and I'll be like, what's the market doing today? I don't look at the markets every day. I think that's not healthy. I will come in, do what I need to do, buy what I want to buy, and then I'm done and I'm out. I'm not going to look at the markets every day. I'm not going to look at at my stocks every day. I don't do that. There sometimes will be weeks where I don't even know what my shares are trading for. I don't even know what they're trading for, and I'll update myself in the same. Okay, you see, someone else is saying they do the same thing. I think that also investing is it's a mental game. It is a mental game. So I know that Peter Lynch uses the quote, it's about guts and not brains. Well, and I know it's a metaphor, but it's all brains. And it's brains, it's psychological as well. Like, you don't want to over worry yourself. If you're newer to the markets, be very careful with falling for the trap of constantly looking at your stock price. If you're doing that, if you find yourself doing that and you're listening to this video, if you're in the Discord call and you find yourself doing that, reach out to other members and then start talking about it. I'm sure that they can share some tips and tricks. We have a lot of people who've been in this for a long time, and then they've gone through it. Trust me, everyone's gone through it. Every single new investor has gone through that, where they've been looking at the stock price over and over and over again, daily or weekly even. I'd say that. You want to know what your business is doing. That's not what I'm saying, so just careful with that. You want to know what your businesses are doing. You want to keep up to date with what your businesses are doing, but you don't want to see the quote daily of your business unless you are interested in purchasing more or interested in selling, and you're coming to the table with that mentality. Like, I'm going into my brokerage account because I want to buy these shares. That's maybe where I'll come in. I'll do it for fun here and there. Yes, I'm guilty of that, and that's fine. Do that, but don't be that guy who's constantly opening their app and being like, "Oh my God, my shares are up 5%. My shares are down." No, it's not healthy. It's not going to promote good portfolio management for yourself. It's not going to be viable. Fabio, it is hard because if you watch financial vids, you will be spammed with recommended news YouTube videos about big events every day. Yes, I understand that too. And you know what? That's kind of goes to show, like, when this whole British pound thing was happening, you guys saw it happening in the general Discord. Cole was egging me on to make a video on this. This is my video on it. All right, and I don't even know if I make it a clickbaity title because I don't really care. But if you're making your income from the clicks, right, your incentive structure is so that I have to constantly make content that you are willing to click on and watch. So, for example, if that was the primary motive and goal, I would never cover small companies or that no one talks about, like stocks that don't get covered at all, because the strategy would simply be only make videos on the stocks that people are looking up in aggregate, right? The most interested stocks. So making Intel videos, I don't know what's interesting right now to the people, but basically, I don't even look this up, but basically in theory, what you would do as a success strategy was, because I'm not ignorant of it, but you would go and find out what are the most searched stocks on YouTube right now. And there's a very easy way to do that. There's websites, etc. I think YouTube even has the built-in ability to do so. But you go do that, you find out what they are, you make videos on that, you'll get more views. That's easy. Or you do the route of, okay, I'm gonna, let's say the newer trend of grifter slang, whatever. So you do that and you put their face on it and stuff. Like I'm already surprised, and I guess a form of pride, by the way. I'm personally proud that the live streams get the views they do, and literally the thumbnail is just my face and a microphone, and then the title was Capital Mindset Live. So that's already, it makes me happy when I look at that, because I'm like, okay, I didn't put a clickbait title. I put a very generic thumbnail, and it's actually repeating the same thumbnail, and then still over 1,000 people watch that live stream in aggregate. So that's like, okay, that means that there's 1,000 people who I don't need to clickbait to get that, right? And if you do quality content, hopefully like it gets recognized over time. Or if you try your best, let's say, because I don't know if it's quality per se, but if you try your best, you put your best foot forward, it's rewarded over time. And that's why I'm also proud of the CM community, because it's kind of been built over time. A lot of you are like the right mindset kind of people, so it's solid. But anyways, enough patting you guys on the back. I'm patting you guys on the back all day. But just in summary, I'm very proud of it. All right, so true clickbait thumbnail, capybara, yeah. There's a funnier way of saying that, Nash. But yes, get to stock ASMR. Get into stock ASMR. That will be the new trend. Okay, so, but anyways, yeah, that's pretty much what I'll say is like for the mental health. I get it, because YouTube content creators, that's basically their primary motive. If this is like how they generate their income, it's their primary motive. They have to make content that is viewable, let's say. All right, top 7 stocks. Yeah, you see, like that's definitely like a title. Top 7 stocks to buy puts on. Like, yeah. Oh, and what I find interesting, I'm going to comment on this too, because I guess it's pertinent also to newer investors. So this part of the video. Be very cautious of the growing trend around options. I've been seeing it, okay? I think all of you have been seeing it too. There's a huge, well, no, not that I'm finally seeing it. I'm starting to notice that like the degeneracy levels are rising. But let me explain, because for call options, purchasing and buying options has always been there. What's on the rise is the belief, and it's being instilled among newer retail investors around selling puts and calls, selling covered puts, selling covered calls. Let's refrain from talking about the poor man's call and puts. Strictly talking about selling covered calls and puts. This is the new rise that's been there, and I'm kind of almost getting, I am cringing on it, but it's also kind of getting worrying, because then a lot of retailers or a lot of new investors are going to get involved and not understand what it is they're getting involved with. So addicted to the red days. Fabio finished them. Who's finished who? Tell me. Yes. Yeah, I get that. No, I get that. I'm talking about in form of content creation. So content creators. So during this bear market, because basically none of these bigger YouTube channels have had a successful investment almost like the entire year or so, and they blame it on the bear market. Oh yeah, I forgot this is being recorded. Well, I'm not saying names, guys. I'm not saying names. I'm refraining from saying names, but yeah, okay, yeah, it's being recorded, so I'll be more diplomatic version. Oh, someone posted he ain't lying. All right. Yeah, but yeah. This is basically turning into like a live stream now. But yeah, if you guys comment on anything that you guys want me to get into, I'll get into it. But yeah, just the whole craze around selling options and creating content around that has been, I don't know, because I feel like it's not adequately addressed why you're very likely still to fail. It's no easier. Some people are pitching it like it's free money, it's easy money, and that's my concern. Better than oh my gosh. A future what? Our desires. Oh, well, I don't know if you guys knew about the rumors with EA, but oh, you got one, Hayden? All right. Let it out. Oh, Micron's earnings are tonight. Any upcoming? Yeah. So the upcoming events, there is. Yeah, we actually talked about that this Sunday. So Micron's reporting earnings right now. Oh, in EA. Yeah. The rumor is that EA is going to be bought out by someone. Yeah, again. So won't say who, but there's the rumors. No, can't type it in chat. No, it's not Microsoft. I can say no to that. That's easy. I'm not going to say yes or no to anything else, but I'll just say no, it's not Microsoft. Easy. It's not Buffett. That's the last one. I'm not going to say anymore. Yeah, SLR relief for the banks. What are the good / the bad opinion in the current situation broadly? Okay, so you're saying, is SLR a ticker real quick? I'm just guessing it is. Silver Lake? Oh, no, sorry. You're not talking about the, okay, you're not talking about the ticker. You're actually talking about, okay. Let me pull it up. Oh, SLR relief for banks. Okay, I thought you put the ticker, then relief for banks. It was like, I never heard of that. And I thought that was a bank for some reason. So, broadly speaking, my thing with banks. Okay, so I bought banks, then I sold banks. Why? Because you guys remember, like, I got back into banks, and then as quickly as I got into them, I was out. The only one that remained is Citigroup. Again, for the same reason, Citigroup was the only one that remained at the end of 2021. But in the gist of it, my concern with banks right now is, obviously we have rising rates, but people, again, always assume rising rates. Not always. I know you guys don't, but typically what I see with... Which one? No, it's not. It's not a giant one that's gonna happen. We're already in it, Fuhad. Like, remember, I've always said, like, once you're, like the analogy of where I am. No, we've been in it the whole year. Yeah, that was like the whole topic of it. But the thing is, it's like, it's one thing kind of seeing the storm there, but like another thing is like saying when we're out of it. It's not a plausibility. So reconnecting with the question that I received earlier, and I might edit all this out, by the way, this part from the stuff. This will be just for you guys. I don't know, because I'm questioning right now. But there's a difference between seeing the storm, but then being inside of the storm, and then being able to tell when we're out of the storm. So you don't know when it's going to end. You don't know how severe it's going to get. So the more successful strategy for me, I don't know about for you guys. You guys do whatever you guys want, but I'm going to be buying assets I like at prices I like. And then the only thing was the recognition of the current situation determines where I'm targeting my capital mostly. It's like an optimization. So with banks, like, why did I get rid of all my banks besides Citigroup early or at the end of 2021? Well, is because under that recognition. Now, what would have been the optimum move? Looking back, what was the best solution? Because we have mistakes. So my mistake was not identifying precisely that insurance companies would actually be a really good safe haven. I had exposure to insurance companies. I had exposure through Unum, which Unum's performed phenomenally. I'm very happy with that performance. But that would have been, if I went back in time, I would have had increased my exposure to various insurance entities. And you actually can go back and see all of them. They've done really well throughout this, because in a rising rate environment, they are the most who stand to benefit, not banks. Banks need lending growth at the same time. And then very similar to how, well, we did poo-poo on them, but when we looked at UWMC and Rocket Mortgage, those two have performed terribly, absolutely horrendously. And people thought they were very cheap back in the day. And again, people were ignoring the nuances of what we were kind of heading into, where we were coming out of a huge refinancing wave. And then we were entering an era where in a rising rate environment, you're not going to see that refinancing wave. So all those numbers that were looking good then, were not going to look good in the future. And Rocket Mortgage IPO'd at the perfect time, in my humble opinion. UWMC did as well. because now they're going to be in a very hostile environment for their type of business. Because right now I think mortgage rates are reaching around 7-ish%, which that's going to dictate the appetite to borrow for the consumer, which affects what, guys? Lending growth. Because if the consumer isn't about it, let's use some more relaxed lingo. If the consumer isn't about it, then yeah, if yeah, exactly. I gotta come down a little bit. But if the consumer isn't about it, then okay, how is that going to affect the banking system? How is that going to affect? So kind of tying back into banks. Banks have a problem right now, broadly speaking, of just the consumer not being at a place where they really have the appetite to borrow at, let's say, 7%. It's not really there. And real estate hasn't shown its effects yet. Real estate is very slow moving. So remember the dates when we talked about Wells Fargo? What did I say? I said 6 months to a year. That's my range. 6 months to 1 year. We're approaching the 6 months. You gave it 2 years? Well, 2 years is how long it can last. I'm saying when we start to see the big effects, 6 months to a year. Because notice I didn't say 1 month. Notice I didn't say two, but could have been earlier. I think we're seeing it a little bit earlier than what I said. But like we're approaching the 6 month mark very soon. I think actually no, yeah, like next month I think is the 6 month mark from that video. And then we are then, seeing, okay, well, what's going to happen? But Wells Fargo was a good barometer. Not the best because they're not the largest player in absolute terms, but they're the largest of the big four banks. And then you also, again, have Rocket, you have UWMC. And broadly speaking, they're not having a good year to say the least. But let me see real quick. Well, these bonds are all fooked. I get that. But the banks can't buy bonds the way that they could. Jamie Dimon blasted the stress tests around this, even as the inversion was occurring. Yes, so that's more of okay. So that's a good point, because if we're getting into Jamie Dimon's commentary around the stress test and basically how we handicap, that's frankly, let me be honest, that's what we're doing. In a lot of ways, we're handicapping our banks. We're tying one arm behind their back and not allowing them to do what they do best, and that's a bit problematic in its own right. So we're also, I guess we have a player on the bench. Technically, we have Wells Fargo. They're literally like, think of them as a top player, and we have them on the bench right now. That's a bit of a problem in and of itself. Let me scroll up because I don't want to skip your rest of your questions. Let's see here. Okay, so no, I haven't covered Sony. It's being asked that I should cover Sony. Well, if I covered Sony live right now, it's going to do you a disservice because I got to sit down, go through Sony, go through all their business lines, and one by one, and then come together as one company and then kind of give my opinion on the whole company. If I look at it now, we're going to look at the financials, stuff like that, like super preliminary. We're going to do a deep dive for what. Okay, definitely I'm not going to put this up now because I'm going to throw some shade here. But we're gonna do a deep dive for Everything Money Standards, right? And I don't want to do that to Lincoln. I want to give him a capital mindset dive. Fabio said he's doing a dedicated video. Yeah, I'm going to do a dedicated video for it because I don't want to give you an Everything Money deep dive. I want to give you a CM deep dive. Okay, so do you think you admire me for looking at beta testers? Let's see, what is this comment about? I also mentioned I was going to do that as well. Interesting. Oh, what are the input costs looking like? Let's pull up their filings here because we can see. Because I just want to make sure, how are they managing their input costs? That would be one question immediately that comes to mind. Because honestly, they okay, because that's okay. The first thing that I would want to know is how's their business function? Is there anything quirky, unique about it relative to competitors that we should be worrying about? Or are they pretty straightforward, cut and dry, just like their other competitors, how they operate? Are they asset heavy? Are they buying, they have a lot of cans? Okay. Are you serious? Yeah. Yeah, what the heck is this? Wow. Yeah, I wonder. Okay, so they have to. So this inventory is valued on LIFO. Okay, so that has its own implications there. So their cost of goods sold must be rising drastically if they're using LIFO. If we're seeing higher input costs. Yeah. So let me see. Let me go to the income statement. Cost of goods sold. I want to see 2020, but no, I have to go into the. Oh, do I have to really literally go? Okay, whatever. I'll just do it. I just won't do it the lazy way. Sales are kind of coming back down to normal. It seems they had just like a spike in 2021. So for some context, Fuhad he's done a write up in the whatchamacallit, what's it called? The forums, the investment ideas forums. And so I'm going to read an excerpt that he's provided here for me. Oh, okay. I thought you were putting an excerpt. All right. But okay. So I'll read this then. On the I was going to say, Fuhad, I was like, wow, this is, I should have you write up my stuff. On the agricultural side of the business, which is where it all starts, the 2021 pack season saw the early inflationary pressures with raw products costs up more than 25% to our more than 1,400 producer partners in order to stay competitive, the alternatives to growing our vegetable crops. These costs have increased an additional 30% as we contracted for the 2022 growing season, which certainly concerning. The pricing levels that we see now are similar to that which we saw during the years of the ethanol-driven commodity pricing. The point being, we have been here before, we dealt with it. Okay, so basically they're, okay, whatever. Unfortunately, bunching prevented our ability to process all the available products, while overall we do not see a budget crop. We were able to deliver the tonnage required to meet the needs of our customers. I feel like this is going to go into the too difficult bucket for me. But let's see it's up and to the right, therefore you should buy it. There's a lot of question marks, things outside of their control. For me personally, but yeah, I wonder how we capitalize their assets. Oh my gosh, Nash. Oh, Fuhad, do you see what Nash posted? That is hilarious. Your write-up. Oh, I like that you're using it because, like, you know, that's what it's for. You can write however. You're not going to be censored in there. It's your own creative masterpiece. And if you make it entertaining to read at the same time, you know, I think better for the reader. Yeah, it's authentic. This ain't no Seeking Alpha. You're not going to see that on Seeking Alpha. I don't think you can publish an article with swear words on Seeking Alpha. You must buy a vegan or soy boy stock. I mean, this is the vegan soy boy stock right here. All right, I'm going to end the recording because we're at an hour-long video.